If I were Jim Chu, I would start by saying good morning, good afternoon, and good evening to everyone, and welcome to The Next. It's August 19th, 2021, and we're joining from all over the world for Untapped monthly pitch event, where we have founders from emerging markets pitch to global angels. I am not, though, Jim Chu. As you can probably tell, my name is Wendy. I run global partnerships and communications for Untapped, and I am hosting The Next today. So thanks everyone for bearing with me and having me for my first time ever hosting the show. I've watched many times, so we'll see how we deal. So without further ado, we'll kind of get started with some introductions of who is joining us today. We have a really great lineup, which is very exciting. And then we'll kind of get kind of right into it. So before I do that, we're going to do some crowd control with this great image of Jim. Because this is an open forum and we use a meeting instead of a webinar in order to enable you guys to kind of chat and interact on the sidelines, please do mute yourself when not speaking. It just makes it clear for everyone. There is a chat box that's really active and great for, honestly, a lot of our best networking happens in the Zoom chat box every month. So introduce yourself, drop your LinkedIn link in there, let us know what you're up to. There's always some really great connections and networking that gets facilitated in there. So definitely make use of that. Moving on to meeting our investors. So today we have two really incredible female angels, and Ben is on his way. So we'll start with Christine, who's from the Baobab network. I've worked with you guys in the past. We're very excited to have you. So if you just unmute and introduce yourself, please, Christine.
Yeah, absolutely. Fun for me to start. Great. So my name is Christine Namara. I work at the Baobab network. We are an accelerator for early stage African startups. I think this is a good introduction. I think personally, 10 years in the startup ecosystem, had the privilege of working at two high growth tech startups, Africa Stocking and Sandy. And so it was a natural progression for me to end up in the VC world. So glad to be here and excited to hear the pitches today from these amazing women.
Thanks so much, Christine. Thanks for being here. She's joining from Nairobi, so she's on the later end of our time limits. I'm here down in Cape Town. We're kind of spread all over the show. And Petra, who will be up next, is joining us from Vienna. Petra, Wolkenstein, please, an introduction. Thanks for being here.
Thank you for having me, and excited to be here today and contribute. My name is Petra Wolkenstein. I'm general partner of Startup Wise Guys Africa and CEO of Key to Investors. Startup Wise Guys is an early stage VC together with an accelerator. Our background is running programs in Europe, but now also in Africa. We mostly invest into B2B, specific verticals, early stage. We have international collaborations with Google, AWS, Microsoft, etc. And we are proud that we have 230 startups in our portfolio that we have collected over the last 9 years. The nice thing for us, an important thing for us, is that we will start another program for acceleration in Eastern and Western Africa this autumn in November. So we're up for applications, and so if there are startups from retail tech, agri-tech, fintech, and education tech that are in revenue, we are happy to see applications. And I'm very happy to be here together with Christine, and hopefully Ben will also join us on the investor side and learning more about Yasmin and Sabrina and their startups and the progress.
Perfect. Thanks so much for the introduction. Thanks for being here. Startup Wise Guys is our partner, our ecosystem partner on this episode. So definitely look them up. We'll have the Nest crew drop their link in there as well. So any founders in the audience who are interested in learning more about the accelerator can learn some more about that too. So thanks, Petra. Unfortunately, Ben ran into some issues as well. So he has not joined us yet or may be unable to join us. But typically, Ben Wei, who's a really incredible founder himself, would have been online as well, and hopefully we'll get him on a little bit later or for a future episode. And then moving
As a
on
note,
to,
I'm happy to step in for Ben as asking some tough questions if the entrepreneurs would like that, in case
Perfect.
that's helpful.
Perfect. Yes, Jim Chu, everybody on the move, but here nonetheless. Hopefully your screen's big enough to see the pitch deck. Perfect. Okay, great. And then moving on to our founders, really, really excited about having both of you guys on. I've followed both of your work, so I'm excited to hear more about it. We'll get started with Sabrina Dorman, CEO and COO, and co-founder of Zumi, based out of Kenya, for an introduction, and then we'll introduce Yasmin, and then we'll get started on some pitches.
Hi, everyone. It's great to be here. I've been on some of the Nest events previously as a spectator, so it's nice to be on the other side. It's quite exciting. I'm Sabrina. I'm co-founder and actually CFO, but I'll take COO as well. That's fine. Based in Kenya, but been in the East African region for, I think I'm going on 7 years now. So yeah, looking forward to connecting with everyone and telling you guys more about Zumi.
Perfect. Thanks again for being here. And noted CFO, we'll make note for next time. And finally, Yasmin, please, an introduction before we get started.
Hey everyone, nice to meet you all. Excited to be here. I'm Yasmin. I'm a German Ghanaian, currently calling out of Accra. I'm the founder and CEO of AFG, and I'm looking forward to learning more about everyone.
Thanks, Yasmin. Thanks so much for being here. Founders will have 5 minutes to pitch before we open it up to the angels for 15 minutes of Q&A. There we go.
So thanks everyone who's joined today. I'd like to start off by telling you why Zumi exists. The idea for Zumi came about from an experience shopping for clothing in Nairobi. There's a market that everyone goes to. It's called Toy Market. It's an open air market. There's lots of stalls everywhere. There's items laid out on tarps on the ground. And I was shopping for shoes and I found a pair of Forever 21 ballet flats. They were used. And I went to buy them and the price was $20. And I thought, well, that's about what I would pay if I bought them new in New York or Hong Kong or London. Something is very broken in the supply chain here. And it turns out that many people have had this experience, including my co-founder. And so we got curious and we started digging into the why and came to find just how fragmented this apparel supply chain is in Africa. And that retailers are getting a pretty bad deal. So just to paint the picture for you a bit, a typical clothing retailer like Joyce that you see here, to stock her shop, she would have to wake up very early in the morning at around 4 a.m. She would take the bus to a central market. She searches for her goods. She haggles on the price with different brokers. Then once she gets her product, she has to pay to get herself and her goods back to her shop by 9 a.m. so she can open for business and start selling. And once she makes enough cash to be able to buy more stock, she repeats this process all over again. So Joyce's problem is that she's stuck in a cycle of subsistence retail, and she has some pretty significant barriers to break out of it. So one is because there's no price transparency, she faces inflated cost of goods. Two is because her logistics are complex, they're also very pricey. And finally, because she's an informal retailer, she doesn't have a track record of transactions, so she can't access credit, which limits her ability to grow her business. So Zumi provides a simple e-commerce solution for informal retailers. Our technology puts the entire apparel market in the hands of these retailers, so they can access lower prices for their stock, they can get easy and affordable delivery, and they can build a digital record so that they can be evaluated for credit. So this is a snapshot of the supply chain. You can see it's ripe for disruption. There's many layers of middlemen that make it inefficient, makes it costly. And so what Zumi does is we cut out those layers, and in the process, we're able to take a healthy margin and still leave room to pass on cost savings to retailers. The business model is also simple. We list goods from suppliers on our platform. A retailer places her order. Zumi collects the goods from the supplier and we deliver to the retailer. And then we take a 15% commission on that transaction. The apparel market in Africa is big. It's $36 billion across the continent and $2 billion in Kenya alone. And there's plenty of room to grow. Zumi has had incredible traction to date. We're very excited about this year of growth that we've had. We've been growing at over 35% month on month. And so far, no sign of letting up. Our growth is really centered around our retail customer and her journey. So to begin with, we start by helping them save money when they're restocking with lower prices of goods and affordable delivery. Then we layer on financial services. And with this, we've already seen our credit customers more than double their average order values. And next, where we can really unlock catalytic growth is using technology to graduate retailers from offline to online. So instead of selling solely in person, with our tech, they can sell through chat, they can sell through social, they can sell through websites, and that's really where growth becomes exponential. So as the value of our customers multiplies, we will also be expanding regionally. First to East Africa, other countries in the region, and then to West Africa. And this puts us on a trajectory to reach $100 million in revenue with 10,000 retail customers by 2025. I'm actually going to skip ahead because I think I'm a little bit over in time and I want to show our team. So this is the Zumi leadership team. William is my co-founder. Our general manager is Eric and Khadija is our head of supplier management. So we are steeped in experience in e-commerce and retail and distribution from Amazon, Coca-Cola, and Rocket Internet. So we feel very confident in being able to execute operations across the continent. And finally, we have ambitious goals for this year. We are in the midst of raising a bridge round of $500,000 to support our growth. And we're actually about to close in the next 2 weeks or so. So if there is anyone on this call who's interested in moving quickly, then I'd love to speak with you directly. But other than that, later this year, we'll be raising our first priced round for our Series A and also looking into some debt financing as well. So with that, I will close and open it up to questions. I'm eager to hear from you all and thank you for your time.
Perfect. Thank you so much, Sabrina. Super clear and really exciting growth. So well done. You can put up if you feel like that slide that you had skipped over maybe, and then maybe that will entice some questions. But over to the angels. I'll pass it over for 15 minutes, please.
Hi, Sabrina. If I may start, great pitch. Thanks for that and impressive journey on your traction. I have some questions on how you're reaching your customers. If I understood it correctly, it's informal retailers. So I would be curious to learn a little bit more about your acquisition channels and the relationship of your cost of your acquisition with the revenues and how long it takes to pay back.
Yeah, actually, I do. Let me reshare my screen because I have a slide just on that. But while
thought so.
Yeah, acquisition is really interesting. We do have sales agents by territory, by region, and they are our first kind of touch point for acquisition. But what's really interesting is that, you know, we'll kind of see potential in a certain neighborhood or market, if you will. Let's say, you know, a couple kilometers outside of Nairobi. We'll go into that market with a team of our sales agents and Zumi t-shirts and stickers and aprons and all of this and do an activation and meet retailers face to face in that market and introduce Zumi's value proposition to them. And typically what happens there is we might get, you know, 5, 6, 7 retailers who will place their first order through that sales agent. And then what we notice is the rest is word of mouth. So once those first, 5 retailers order and they have a successful order and they see how Zumi works, the rest of the market starts to fall in line as well. And that's kind of the first step in acquisition. And then once customers get to, a certain level around, being with us for 1 month or so, they start to kind of order more automatically on their own. So then the cost of that sales agent and being in the market drops off. So this shows you our unit economics, but also shows a bit of our cost of acquisition. This is based on basically the cost of that acquisition activity and the sales agent who's serving that customer as kind of like an account manager over time. So we do get a pretty good value for our money in terms of acquisition.
Looks good. May I shoot another question, or how shall we do that? Yes, may I? So your business model is getting the 15% commission as a cut. How does this compare to the existing structure of wholesalers and brokers that are in between? So what's really the advantage that the apparel retailers have out of the product?
So this kind of shows you the difference. We also have it broken out by actual cost. But typically what you have in the supply chain is there's an international supplier, there's an importer who brings the goods in, then there's wholesalers, and then depending on the market, there's between 1 and even 4 brokers between the wholesaler and the retailer, and everybody's adding their margin on top of that. So you can see here, this is about a 35% markup here. Versus with Zumi, we basically cut out the layers of fat, so to speak, in between, take our margin, and then we're also able to lower the cost to the retailer as well. The other thing that I've mentioned is the cost of logistics in this part of the supply chain is very, very expensive. And so at scale, we're able to optimize a lot more with logistics and pass on those cost savings to a retailer as well.
Great. Thank you, Sabrina, for the great presentation. I mean, I've been shopping at Toy since I was 8, so
there you go. Okay. So,
completely familiar with, these retailers and some of the challenges they have. So I think this is really cool that you're injecting efficiency into the value chain. So my question is really around the tech itself and the adaptation for the retailer and what that looks like, and also the sort of the turnaround time between sort of them knowing about Zumi and them actually transacting on the platform?
Great questions. Yeah, so I think personally what I find really, really exciting is, these retailers, right? Like some of them are still on feature phones, some of them have just gotten their first smartphone, some of them have access to a smartphone from their neighbor or their daughter or what have you. And so we're really here to kind of be with them on that journey of like utilizing technology. And so that's why the sales agent for us that's on our team is so important in the beginning. That's their touch point. That's the person they know. It's the person they can call. They can SMS for any questions. And then what we're doing over time is graduating them to like a very simple web app where they can place their orders. Then they also have access via WhatsApp and by phone, and then over time moving them to a platform that they feel comfortable using, managing their inventory, being able to sell through social media, through chat, and then eventually through websites as well. So our goal is to really be with them where they are in their technology usage today, and then also graduate with them as they do, so that we can basically just help them sell. We want to take away the burdens of, the distribution and the logistics and the working capital and all of that, so that they can focus on selling. Yeah, does that kind of answer your question? I mean, in terms of where our tech is today, we're keeping it as simple as possible. We're user first, so we try to not solve any problems that the user doesn't have. We don't want to just design something, very, pretty that isn't used. So first and foremost, we talk to our customers and try to understand what they would like to use, what channels they're comfortable with, and that's what we build.
Yeah, absolutely. I mean, I can see the various challenges that they could face in terms of access to data, in terms of airtime, in terms of, like you said, feature phones. So there's a host of things that the technology would definitely need to consider to accommodate this group of customer.
Yeah.
So thanks for that. In terms of traction. Could you share with us a little bit more on the details in terms of how many retailers, how many orders have you been able to do, and sort of how that's been progressing over time? So you could share average numbers if you're more comfortable with that, but just share a bit more on what traction looks like.
Yeah, so monthly we're at about 900, I think just under 1,000. Yeah, it's between 900 and 1,000 customers per month. Retention has been pretty good. We've been improving over time. So I think the last month was 70% retention. So it's kind of that progression, like once they start ordering with us enough times, they become very sticky and stay on. And we want to graduate them to credit and graduate them to more stores, etc. Orders is about, I think we're at 1,200 last month. I think what's really interesting actually is the kind of the method of growth. So we've been going neighborhood by neighborhood or market by market, putting a distribution hub in those markets, putting agents in those markets so they have touch points to build trust with those neighborhoods, catering the goods that we sell there to their price points and to the categories that they want to sell. And so we kind of completely infuse ourselves in that market and grow that market as like its own profit center before then moving on to the next. So that's kind of how we've approached growth, because we want to make sure that as we're growing, we're building relationships with our customers and keeping them sticky over time. And then we kind of go to the next and the next and the next. So we've just opened up new hubs in Nyeri and in Eldoret for those who are in Kenya and know these places, but we're kind of expanding outwardly from Nairobi and kind of building the networks within those markets as we go.
Awesome. We still have 5 more minutes, but there is a question actually from the audience in the chat from Stephen Lim. It's great to see you, Stephen. I've not chatted to you in a long time. Who asks, how do you prevent your clients from cannibalizing each other? Quite the term.
Interesting. Can you maybe explain? I don't know if you can speak, but can you explain?
I know maybe. Yeah, Stephen, if you're online and feel like unmuting yourself, maybe you can explain a little further. I'm wondering if you know in terms of competition.
Sorry, it's Stephen here. Just because you focus quite on a parallel as like that, because then the retailers themselves can kill each other with pricing and stuff like that. That's what I'm meaning about your clients cannibalizing each other.
So theoretically, yes. What we have found is we don't really see that a ton in these markets. We do see it with importers and with wholesalers and with brokers. There's kind of cutthroat competition there. But in terms of the retailers, we don't see that, and I think it's really for 2 reasons. One is because interestingly, each retailer has a very specific focus of the goods that she sells. So for Christine, who's been in Toy Market, you can go to one retailer's stall and they only sell jean jackets, or they only sell black leggings, or they only sell baby clothes for ages 0 to 6 months. It's very, very specific. And even on top of that, they'll have, a specific kind of, colors or brands, etc. And so for that reason, there is differentiation within these markets. The second is that, and to be completely honest with you, this is an area where I think we as Zumi need to kind of do more research and get a deeper understanding. A lot of these markets are basically your neighborhood market, and the retailers are interconnected. If somebody can't pay for their goods, they have 3 people who are going to help them pay for those goods. They're all kind of in it together in some ways, and so I personally would like to learn more about those dynamics, but it does not, it's not really conducive to cutthroat competition. It's more of a community success kind of environment is what we found.
Perfect. Thank you. And thanks, Stephen, for the question.
I actually just saw someone mention Luku, but we can talk about that a little later. So my question was actually about, I see that you had a raise earlier this year, if I'm not wrong.
Last year.
Last
Just
year.
before COVID, yeah.
Okay, great. The years are all one big mashup at this point. So my question is, could you share with us a little bit about where that raise got you in terms of traction, and what you foresee your team being able to do with your next raise in terms of scale.
Sure. So the last raise that we had, we were really kind of very, very early stage. I would say that about 6 months of it was during COVID. And what was really interesting for us then is we actually did a number of pilots and experiments with selling the new clothing category as well as the used clothing category. So even though the market was a bit, turbulent with lockdowns and what have you, we used that time to really kind of figure out what, when we decide to do a new category, how would we do it? What would that model look like, so that we can kind of be ready to do that when we're ready to add that for our growth. The round that we're doing now is a bridge round. It really is to continue to support our fast growth in the lead up to our Series A. So that's really to support our tech team. It's to support our management team. It's to add to our sales team and just keep that engine of growth going. In terms of scale, what we're looking at next is one is moving further up the supply chain vertically. So we've done a few pilots bringing in our own containers from international suppliers. So we'll continue to do and expand on that. And then the second will be to do a pilot in another market, so likely Tanzania. And that's really just to prove the replicability of the model in another market so that it's easy for people to see what the expansion plan looks like after that.
So my question is around, there seems to be somewhat of a trade finance element to what you're doing, in the sense that you're buying, obviously, inventory in advance and selling that. What type of payment terms do you get currently? What kind of risks and exposure do you see today? And what do you expect going forward?
Yeah, it's a great question. And I think there's a lot of strategic, there's a lot of strategic moves that can be made in that area to, just work to Zumi's advantage. So where we're at today is we have done some trade financing. We've kind of done two types. One is locally just doing, buying and paying, a day later, 3 days later, a week later. And so we get those credit terms. It's usually about a week because it's quick. This is quick turnover with our goods. And then we've also done some financing for supplier partners of ours who are importing. And so that's usually a 30 to 45 day turnaround.
Thank you for that.
All right. Okay, that brings us to the end of the Q&A. Thank you guys so much. I'm sharing some poll results that we got from the audience, which say that about 50% of the audience would invest over $25,000, with 17% more than $100,000, which is some pretty good feedback. If anyone wants to reach out to Sabrina, maybe Sabrina drops some contact info or the Zumi website, etc. Maybe your LinkedIn in the chat, and then people can reach out separately, or we can always make connections on your behalf as well. And thanks so much. Incredible pitch and really exciting to see all your guys' growth. So thanks for being here.
Well,
we will move on now.
Can I just jump in? I'm sorry to disrupt your moderating, but personally, I'm just incredibly impressed with the traction you've done so far. And this is the type of optimization business that I've always wanted to get involved in, not necessarily in clothing, but certainly in formalizing the informal sector. And personally, I would love to, I'd love to invest. So please, I know you guys are coming close to the close of this round, but I'd like to do a tiny bit more due diligence, but I'd love to participate in this next round if possible.
Thanks so much, Jim. Yeah, absolutely. We'll catch up. We'll catch up offline or separately. But yeah, it's an exciting time. I mean, we're growing quickly, and we think this is the right time to kind of get on Team Zumi. So thanks for that.
And I'd love to see how we can experiment and innovate around the trade finance aspect of it. Part of it will be learning from my side and our side, but I wonder how much of that trade finance can be captured in terms of data and therefore become a lot more predictive. So that's something I'd be very interested in finding out.
Yeah, absolutely. And this market needs it. So great. We'll connect on that. Thanks.
Awesome. Amazing. That's why we're all here. So good to hear it. Thanks, guys. And thanks, Sabrina, again. As Yasmin now, our second founder, gets queued up, you can go ahead and start sharing your screen. Ben, our third investor, was able to join us, Ben Way. I don't know if he's here and wanting to introduce himself, but if you are, Ben, feel free to unmute yourself and come on. Otherwise, happy to have you in the audience. I'm not seeing you though, so not a problem.
I see him, but he is muted, and he might be tied up. I can check in with him while we continue.
Cool, not a stress. In the meantime, we will move on. Yasmin, your screen looks great, and you have 5 minutes on the clock. Take it away.
Hi, guys. I'm super excited to talk to everyone today about AFG. Everyone knows that the future of work is here, that the future of work is different from what we used to know, but many people don't reflect enough on the fact that the future of work is Africa. African talent will make up close to 20% of the global freelancer pool by 2030. And if you think even further ahead, let's say 2040, 2050, it will probably be more like 30 to 40%. So we have a huge workforce sitting here in Africa that is ready to work. Now our bet is that SMEs in Africa and around the world face a lot of challenges that these African freelancers could actually help solve. There are more than 400 million SMEs around the world, and around 80 to 100 million of these sit in Africa alone. Some of them are being supported by Sabrina. The problem that we see is that this African freelance talent that is really amazing isn't able to engage with the SMEs on the other side for several reasons. African freelance talent is not very connected to the market. They don't know how to find projects. They don't know which clients are credible. There's a lot of challenges around, okay, will I actually get paid if I do this on my own? So there are a lot of challenges for them, but at the same time also for the SMEs, because they don't always have the knowledge what kind of freelancer to get, how to find them, where to find them, what kind of contract works. So there's a bit of a break in the market. And what we are saying is that, hey, well, we have a solution for this. This solution is called Peralta. Peralta in a heart shape because we really love our product. Peralta is a market network. It matches top freelance talent from all over Africa with high impact clients and drives quality project delivery. This is important because it's not just a matching platform that brings talent together with projects. It's also a project delivery platform. So it combines two things. And you have top 3% of freelance talent from Africa sit on that platform. We call them Foresighters. And we bring them together with vetted businesses from Africa and the world. The market for this is $9 billion in Africa alone. If we look at the SMEs that sit here, I'm only considering the really big ones that are like the M in the SME definition. And if you go global, then it's actually a $26 billion market. So in total, we're talking about a $35 billion market. We have already advanced our product quite heavily. On this slide, you can learn a little bit more about what Peralta is. It's basically a cloud platform and optimizes 4 steps, the ones you can see on the left. It's an end-to-end solution for talent acquisition. It operates project generation. It has a project execution element or module, and it also facilitates timely and seamless payments. So we've already built a lot of that product and are already running with it. But what we're really excited about right now is to make use of all the data we've collected to really introduce some intelligent and ML modules, because we really want this platform to become a platform that is intelligent on its own, that can decide on its own without any human intervention, which team to put where, that can decide on its own what scope works for which clients. So that's really the point we're at right now. And that's where we're looking to raise money in order to be able to do that. Unlike traditional freelance matching platforms, Peralta is a network. I said market network earlier, because you have a client that has a need. We have to translate that into a project. And then we have all these different people come together to deliver the need of that client. And how we make money is that we take a take rate. Now, this take rate is pretty attractive in our particular business model, because we make a lot more, or we add a lot more value to the transaction than a classic matching platform. So that's where the return becomes pretty attractive. In terms of traction, we've already, sorry, sometimes my presentation gets stuck. We've already completed more than 200 projects through the platform. We operate across sub-Saharan Africa, but also have started serving clients from a number of non-African markets. We've had 100% year-on-year revenue growth for the past 3 years. We've received close to 4,500 applications and been featured in a lot of cool outlets and partnerships. Our team is on the management side, Rashida, Shaunak, and I, but we are supported by amazing people, about 20 people from across Africa and other parts of the world. And we really want to get to building a full end-to-end ecosystem that is fully automated to become the likes of TopTal and Catalan. That's really our big benchmarks. Right now, we are looking for people that are excited about helping us to democratize access to top talent, because that's really what we're all about. We are looking for convertible notes to bridge to our Series A. We are looking for Series A connects and for tech advisors. Thanks for your time and attention.
Fantastic pitch, Yasmin. Thank you so much. Very, very clear and right on time. So well done. Thank you. Over to the angels.
I could jump in. So first of all, thank you for that great, very succinct pitch, and just take a second to celebrate that we have 2 female founders presenting today. So yay to us.
Yeah.
Great.
Unintentionally. I just have to say, this is not a female founder episode. Just so happens that you guys were top of the list. So
we even have a female host today.
Yes,
female host, female investors. Well done, ladies.
But you know, that's the best part of it, that it was unintentional, because they're good founders, independent of wherever they come from. Love it.
Exactly.
Amazing. Great. So I have a couple of questions, but I'll start off by, my background is product management, so I'm very interested in the product. You talked about top 3% of talent, if that's what you said. I think that's what you said. So I'm interested to understand, how do you measure that? That's the first layer. And the second layer is how you ensure quality. And is that something that you're part of in the process of delivering the product to your customer?
Mm-hmm. The quality part is super important, because that's really where the client side of the platform starts appreciating the product. And of course, that starts with, how does the talent get onto the platform? We have a multi-stage admissions or application process that starts with a pretty extensive written form that you have to fill in, then goes through tests and eventually interviews. And the interviews are actually done by people who are already part of the network, because we've learned that great people bring other great people, and they are pretty critical who they feel like they would want to work with. So that works quite well. Now, it's not only the vetting of the talent, though, that is the quality assurance. It's also how the teams operate while they are running with the clients that they've been matched to. So, for example, as soon as a team has commenced, there are milestones that need to be hit. And if the milestones fall behind, there's an escalation mechanism in order to understand why it's not working. If there is a team member that has to be replaced, if there are timelines that need to be adjusted, extensions that have to be made or whatsoever. And we have a knowledge pool that teams get access to. Obviously, the value of this business or this platform increases with the number of missions that run through it, because every mission generates more knowledge and insight. So there's a team in our back office that does nothing but distilling all of that knowledge and sanitizing it so that it can be accessed by the teams that are running. If I'm a team, for instance, that works on a due diligence in a specific sector, for the time that I'm running the due diligence with that team, the platform will give you access to all the documents, knowledge documents we have on due diligence and on that sector, so that you can actually do your work more effectively. The last thing I would say, sorry for the long answer, but quality is a big one. The last thing I would say is the training aspect. Freelancing is now everywhere. Everyone is talking about it. But what people often forget is that freelancing can become quite boring and lonely. So we realized if we want to make sure people stay with us, we have to offer trainings and promotion opportunities. That means there's a training plan you get when you are joining in a specific role, and you go through that training plan. And once you've completed that and as well done enough missions, you can go to the platform and say, I want to self-promote and apply to be promoted to the next level. So that means anyone who wants to move through and become more senior has to actually get vetted before they are able to do so.
Yeah, thanks for that.
If I may jump in next, Yasmin, thanks for presenting and the pitch, and I think it's a highly needed product. Still, I have a question on competition, especially on global competition like Upwork, Fiverr, the platforms that are out there. I understood that you have you're putting a lot of weight on structuring the client need into a project. So the briefing aspect of the client might be eased in a way, but can you explain a little bit how you compare to those and what's the presence of those, let's say, brand platforms in your area?
Absolutely. I mean, we use other platforms quite heavily because we believe in talent platforms. But I think the big difference is twofold. The first difference is that all of these platforms are not really very successful in Africa, because in Africa, it's a little harder to figure out how to find the right talent. You don't have that situation where you can look at university certificates to know who's good. You don't have the situation where you can say, oh, someone worked somewhere, so they must be great. The market is a lot more intransparent, and over the years, we've built up the right muscle and understanding to know what it means to figure out who's actually capable of doing this kind of work. I also don't think that Upwork or TopTal and all these other big players have actually realized how big the market here is. And I think right now they are not ready yet to put all the effort into learning the market. And the other thing, though, is irrespective of Africa, I think our model has a big edge over existing platforms out there because of the network approach that I was mentioning earlier. At the moment, a lot of SMEs, yes, they use Upwork, and I myself use Upwork, but it's for simple jobs where I feel like, okay, it's low risk. I can have someone do this and pay a couple of $100. But what we're really interested in is building the solution for the more complex needs. Oh, this SME has lost a lot of people. They don't know how to improve their HR. That is not something you could put on Upwork. It's a complex project. And for that complex project, you can't just put one person there. You need a team of people that can do it together. Now, of course, complexity makes the transaction harder to scope. But what we do is we build scope libraries. So for any type of need that we've learned over the past couple of years, we have standard scopes of different types, depending on the exact problem, that are our starting point to figure out what the client needs, how much capacity they need for how long, and what the main phases of work are. And then we use that as a starting point to generate an offer from the platform for them. So, of course, again, the value of this increases the more transactions we run, because with every new mission, the value of the scope library goes up.
Thanks, Yasmin, for that explanation. May I shoot another question? Is that okay? Yeah. As you're putting, and I totally agree with that, yeah, as you're putting a lot of effort in sourcing the right people, because it's more consultancy related and not micro job related, what you're doing on the platform. As the recruiting, getting the right people on board is utmost important to deliver that quality. My question is, do clients have transparency who is working for them, and how can you avoid that the next issue that the client wants to have solved is not done directly, but again?
Oh, totally. Like offline transactions. Yes. I mean, for Upwork, that was a huge issue. Oh, sorry. Were you done with your question?
Yes, I'm done. I'm totally done.
Okay. I have a time lag, I think. But yeah, offline transactions are a massive issue for talent platforms like this. But I think, again, because of our model, we have a bit of an advantage, because in most cases, you would basically have to then start coaching the entire team we've brought you, and not just one person. So we have way fewer issues of that nature compared to what an Upwork kind of model would get us into. And I think what we've also learned is that as long as the Foresighters appreciate the service we're also offering to them, because they're also our users or our customers, right? They don't really have a motivation to do that because it's actually a lot of transaction costs we cut out for them. By joining AFG, they don't have to worry about finding their own pipeline anymore. They don't have to worry about negotiating a contract anymore. All they have to do is do the work, and they even get a lot of resources to do the work. So ideally, you are much happier in AFG than doing your own freelancing gigs because it's just a lot more comfortable.
Yeah, thanks for the very detailed answers, Yasmin. I have one more, and this is around the customer you're trying to attract. You mentioned SMEs, but are you able to paint us a bit of a clearer picture of that persona? I ask because I work with a lot of startups, and we definitely run into talent sourcing and how do we make sure it's the right talent and all this stuff. So it would be interesting to understand the profile of customers you attract and generally their capacity or how much are they able to pay, just so that I can measure in my head what type of customer is your ideal customer.
Oh yeah, absolutely. I mean, startups are quite a big segment for us, but I think SME, when you hear SME, you often think of maybe an informal business that is maybe just a small family, 3-4 people. I mean, when I say SME, I really mean businesses that are between 50 and 100 million. That's a lot of our clients, but then we also have a lot that are maybe between 5 and 20. And we actually also have a segmentation logic, depending on the size of the business and the type of client it is. Pricing is actually segmented in line with that, because we want to make sure that top talent is accessible to as many businesses as possible. So in that sense, really anything between 5 and 100 million is our typical client. And of course, there are also investment funds that use our service for their portfolios. There are big DFIs that have started using our service for their portfolios. And of course, there's also that 10-15% of clients that are actually much bigger than the typical SME definition, because they're starting to realize that AFG is saving them a lot of money. But I think our core focus still is the SMEs. And the important thing in that also is that this is also, again, a big retention lever for us, because working with SMEs is honestly a super rewarding thing to do. And as long as you can bring the Foresighters we work with interesting work that they find fulfilling and want to do every day, they stay in the network for longer, and that reduces our headache to have to try new talents all the time to be able to feed our project pipeline.
Great, thank you. I know I said last question, but really last question.
Go for it.
You mentioned the raise at the bridge round you're currently in, which is great. I didn't see, or rather, I'd like to understand a bit more what you'd like to do with the amounts that you're raising. Like, what are the milestones you're hoping to achieve with this current raise?
No, absolutely. I'm also sorry. I think compared to Sabrina, I've been a bit nebulous with numbers. It's the German side of me that is sometimes too private, but I'm super, super happy to share bilaterally what our numbers look like, obviously. And in terms of what we want to do right now, we have built our product so far with an in-house engineering team and outsourced support. We are currently working on bringing a CTO that I'm super excited about into the business. But basically, all the money we're raising right now goes into the product, because we really want to make sure that we can bring the product to the next level. We call it One Peralta. So really making sure that the full ecosystem we're building is fully captured on the platform. And right now, we're really trying to see how much we can push the build with the help of bridge financing before we formally start opening Series A. So that's the play right now.
Great, thank you.
Fantastic. Well, that takes us right to the end. So perfect timing on the Q&A. And we're sharing poll results that show that over 43% of the audience has voted that they would invest more than $100,000 into Africa Foresight Group. So that's great results. I hope that reflects. And incredible pitch. Thank you so much, Yasmin, for joining us. I would say also please drop your contact details in the chat, and maybe any additional information where people can find you in case they want to chat some more afterwards. And congrats. Thanks a lot for the pitch. I think that also brings us to the end of our show. Unfortunately, I don't know if you guys saw, Ben ran into some bad luck, so we hope I'm not sure if he's still on the call, but I hope everything is well with him, and we'll get him onto a future episode. So thank you both Namara and Petra for for holding shop, and Sabrina and Yasmin for being on. This has been a great episode. For everyone in the audience, the Nest does host Clubhouse conversations also at the beginning of every month, the first Thursday of the month, and these pitch events on the third Thursday of every month. So definitely be sure to sign up for some future Nest events and our newsletter as well, where you can find out much more information about what the Untapped team is up to. And we'll drop the link in the chat as well, so you guys can find us there afterwards. But thanks again, everyone, for joining. Great episode, and I hope to see you all again very soon.
Thanks so much for having us. It was great.
Thanks, Lindsay. Thanks, everyone.
Thanks, guys. Great job.
Thanks, Lindsay. Great job moderating.
Keep well. Thanks, guys.